the Market Musings podcast. Well, hello and welcome to the Market Musings podcast here from Stockbox, where joining us today is, of course, Charles Archer. How are you doing, Charles? Good to be catching up again.
Yeah, not too bad. On the mend. How are you? How's life
On the
treating you,
mend.
Mark?
Why? What's been going on?
Oh, it's strep A and flu and all sorts of things all at the same time.
Oh, right.
Yeah.
Okay, well,
It's
spring
all
is
right.
upon us. So,
Yes, indeed. Spring is upon us. It's all right. I don't really get sick very often. When I do, I'm out for the count. But no, it's fine. I am much improved. Family are all on the mend. Everything's fine.
Okay.
It's just we went through winter without getting sick, right? I think this is what annoys me. And then kind of like we've got to spring in March, and then and that's when we decided to get ill. I thought we'd avoided it for the year, but apparently not.
Oh, okay. Apparently not. No, you can't
No,
avoid
no,
it, can you?
no, you never can.
No, but what's going on from your perch then on the market front? Because we hear time and time again how bad the markets are, how difficult it is to raise capital, but yet we see the indices, maybe not the FTSE yet, but certainly the S&P 500, the Nasdaq, the Dow, all making history, all human time histories, blowing off their all-time highs. So where's all this money going? Why is it not in the? Why are firms struggling to get placings away?
Oh, that's pretty simple, right? I mean, if you talk to any investor on the floor and just go like the coal face, where are you going to put your money at the moment? You can still get 5-6% interest rates if you know where to look. Completely risk free. You put money into like the S&P 500 or any of the Magnificent Seven stocks, Nvidia and Microsoft, for example. You don't know, but you can be pretty confident over that the share price is going to rise, at least for a time. And so it's very difficult to look at the small cap bond market where everything's kind of in the doldrums and there's these placings at huge discounts all the time and go, this is a good place to put my money at the moment.
Okay.
What's going to happen? This is my hope anyway. Well, not my hope. I think it will happen regardless of what I hope or not. The AI bubble, which has been bubbling for a long time, is going to burst at some point. And then when it does, all of that money that's currently locked up in the large caps is going to flood into the small cap sector, because what's going to happen is Nvidia, Microsoft, Apple, whatever, they're all going to drop when the bubble goes bang, assuming it does. Investors will take the money out. The money doesn't disappear. It gets taken out by investors. And then they're going to look around for like the best place to put their cash. Well, at that point, the interest rates will have come down a bit. The large cap market will be in disarray. But the small caps will be already, as they are, significantly undervalued, and hopefully it'll be easier to get funding away. I mean, I was talking to Sean Wade, CEO at Power Metal Resources, pretty recently, and he's had enough of the markets that we have.
Okay.
Well, he said like I think it's like a widely shared sentiment that that small cap companies are not being valued properly, that they can't raise finances at a realistic valuation. I mean, it always used to be the trade-off, right? That if you were a small cap company looking to raise money from places, right, in a placing, the places would either get a decent discount on the shares, or they would get warrants attached with like a small discount. And the problem that you're having now is that they're demanding a deep discount alongside the warrants. So they get the shares that are discounted and they get the warrants. They flip the shares and then they retain the warrants to just keep them for like a free ride in case the company does well. And so you now have this situation where it just every company is just going down and down and down. And you can talk about Avacta, for example, and their discounted raise, or Arc Minerals and their discounted raise, or Barron Oil and their discounted raise, or today Mkango and their discounted raise. And in each of those situations, and there's dozens more, but that's just 4 examples. You're having this situation where investors are going, hang on, why is this discount so massive? The company must be doing something awful. And it's not the individual company. You have to accept at some point it's just the market isn't behaving the way it should. Like the social contract between the companies and investors is just kind of disappearing, and it needs to change. It will change when that bubble pops.
But this bubble then that we talk about, okay, I mean, it's only just started though, isn't it? It's only just got going. So how long is it going to keep going for? I mean, Nvidia, of course, going crazy, but there's a lot of small AI stocks that really haven't got going yet. If we're talking a .com type thing, I mean, I was too young, but the stories I've heard were some crazy IPOs were getting away. It was so easy. I wouldn't say we're there yet on the AI craze.
Well, no, well, it's being held back by the higher interest rates, isn't it? Because you, when you're a small company, regardless, and you're looking to list or whatever, you need to get ultra loose monetary policy to get those crazy IPOs away. Now, interestingly, the argument is from the bulls, and it's a good argument, is that when the interest rates start to come down, you'll start to see those crazy IPOs get launched because of, the cost of long-term financing will be cheaper. Having said that, in America, whenever the interest rates have started to be cut, it generally precedes a pretty sharp downturn, both in the stock markets and just in the general economy. So it'll be interesting to see how that plays out. I mean, a lot of the like the general rules around investing seem to be turned on their head at the moment. Like rates are, compared to asset values that are pretty, they're quite high, and yet you have this tech stock bubble. Well, the rates are high. You have Bitcoin is reaching, all-time highs. You have gold, which, as a general rule, when interest rates are high, gold should fall, but it's not. It's again
not.
Record highs.
Highs. Over 2,200 last week. It's come back a bit, but I couldn't believe that. Yeah.
So you're looking at like all of these, all of the rule book is being ripped up and thrown out, right?
Yeah.
The tech stocks with rates as they are, regardless of the AI bubble, should not be as high as they are. Gold should not be as high as it is. Bitcoin should not be as high as it is. And this isn't just my opinion. That's just years and years and years of economic and financial modeling. It's just the way. And so the fact that everything isn't working as it should means it's difficult to know what will happen next. It's difficult to predict, but also means that potentially it is a bubble. It will pop. And then in hindsight, people will go, hang on, it wasn't obeying the rules. And now it is obeying the rules again. And it just had to, come back to reality. But, but I could be completely wrong. It might be that NVIDIA is at the start of like, the AI bubble isn't actually a bubble. It's just the world has moved forward. And now
it is crazy though, isn't it? Like you say, the rule book's been ripped up. And when you get conflicting signals, it's a time to kind of be very cautious, because what gets me is gold. Why, when all the indices are blowing up, and then gold at the same time doing the same thing, it just seems completely opposite to what it should be doing. It's very strange. What about the dollar? I actually haven't been checking the dollar. How's the dollar been?
I haven't been checking either, to be honest. I mean, I would imagine that, again, the rules we're talking, the Fed and the Bank of England, Swiss National Bank gave up, they cut rates. But you're looking at the Federal Reserve is talking about cutting rates this year. And when you cut rates, generally, the dollar becomes a less attractive asset.
Yeah, and that's usually what happens then when the rates cut historically. Would you see more liquidity in the markets, or would that be the warning shot? Well,
it's complex. If rates get cut, gold should rise, because gold becomes you can buy more dollars of the same amount of gold. Or alternatively, I mean, you get less dollar return for your dollars when rates get cut, and therefore gold becomes more attractive. The argument is the rates come down, and therefore you can get access to more money on better terms, and then the economy gets roaring again. But as a general rule, when the rates start to get cut, people say, oh, the rates are getting cut because inflation has come down to 2% or 3%, for example. That's the argument people make. But actually, what it is you're cutting the rates because you want to encourage economic growth. If you already have decent enough economic growth, you don't want to cut rates to send the economic growth stratospheric. And this is a really interesting thing, because with the US economy at the moment, as we say, all of the indices are hitting record highs. These tech stocks are doing incredibly well. If you cut the rates, they'll then get access to even more money. You might find that the Federal Reserve just blows the bubble up even further, and then when it pops, it'll be even worse. So there's a lot of assumptions. People say, oh, the rates are going to get cut, the rates are going to get cut. Is that like a economically responsible thing to do when everything's at record highs and nothing makes sense economically? Possibly not. But the pressure to cut them is obviously massive, especially in the US. The housing market is completely seized up because you have 30-year mortgages. So, a lot of people just can't afford to buy a house. It's the same in the UK, to be fair. I mean, the prices aren't falling massively, but the volume of sales has just collapsed. But I don't know. I mean, the answer is I don't know. Nobody knows.
No one knows.
A lot of people are saying, they definitely do know. And this is definitely what will happen. But actually, all of the rules that, people have believed for years and years are not currently being applied. The only thing I do know is that power metal and also gold and metal which they own 61% of. Sean's very unhappy with the markets, but he's one of the very few companies that's managed to raise at a premium. So a lot of people would love to be in his position, having done that a couple of months ago. But
yeah,
he's the one.
indeed. And I mean, you did an interview, didn't they, with the Sunday Roast
Yeah.
chaps the other week on and with involving Sean. So I mean, what I haven't actually had time to listen to it yet, but what was the main sort of themes that came out from chatting to Sean? I mean, okay, maybe a little bit you can tell me on what his opinions of the market are, but it's more interesting to find out, what he's going to do with the company, and more importantly, what questions you had. Did he put any of your concerns to bed about the future prospects of POW?
Oh, I think their prospects are great, especially the share price where it is now. I put out a research note, FCA regulated, where I was saying 3.3p is a realistic price target. Probably should be increased at the moment. I just don't have time to update it. But I mean, if you're looking at near term catalyst, you're going to get Malopo farms. You're going to get that drill result back relatively soon. Uranium energy exploration. You had an RNS out today, where Sean was talking about. You've got some significant interest in essentially making that IPO bigger, maybe having like more assets in it rather than like the four that's currently being vended in. You've got Power Arabia, and Power just raised well over £1 million from a strategic Saudi investor and UK investors. So there's exploration that's going to happen in Saudi Arabia soon, presumably. Acquisition of 75% interest in GSA, which is a potential revenue generating company very soon. And then you've got stuff going on in Tati. There's Katoro Gold and all of those shenanigans going on. And then First Development Resources and their IPO. And that's just, off the top of my head. So, Sean's got, there's a lot of potential catalysts and lots of things that could go right for Power.
Well, what do you think? Did you ask him about what he's doing with the Saudis? Because that seems very much his focus now, and seems like a lot of where perhaps the efforts of the company are going down, and it seems to be like there's quite a big opportunity there. What do you think?
Yeah, I think there's a huge opportunity. I mean, I've said this about Saudi Arabia for ages, and Western investors need to kind of get their head around it, which is that Saudi wants to if you look at the Future Minerals Forum, they want to really develop mining in the country because they know the oil was eventually going to run out. And while they have tons of money, they have very limited expertise. So when Power comes in, or anybody else comes in and goes, look, we can go find these assets and drill them for you and develop them for you, etc., etc., etc. That's something that Saudi Arabia is really going to be interested in. Now, yes, they've raised that money and they've set up their Power Arabia, which hopefully they're going to IPO as a spin-off, and they're doing a pre-IPO financing round. And the general idea is they're negotiating, and they've got several memorandums of understanding for potential joint ventures on exploration licenses. So this is where I think if I were to be Sean for a second, and I can't quite get the accent right, but his perspective is he wants to get this assay out of Malopo. He wants to get the uranium energy exploration IPO out of the way. He wants to get First Development Resources in Australia, that IPO out of the way, and then this is kind of proving the business model, which spin out the IPOs and let them look after themselves. And then once he's got those dotted his I's and crossed those T's, it's going to be a case of we're really going to focus on Saudi Arabia because that's where the money's going to be made over the next few years. And again, the thing is that the fact that the company can raise or did raise at a premium, and now a significant premium to what the share price now is, it just indicates to me that while the small cap market in London and perhaps retail investors don't appreciate Power, there are definitely investors in other parts of the world who are looking at the portfolio and the expertise they have in the team and thinking, yes, this is a company worth investing in at the moment. And so but again, there are so many irons in the fire. It only takes one to leap away. I think, for example, when the UE IPO does launch, and it sounds like there's going to be a little bit of a delay because they've had more interest than what they thought, so they're going to try and make it bigger. That's also going to generate more money for Power. How many, $1 million, 2 million extra, plus the 1.3 million raised, you can do a lot of drilling for a few million pounds. So yeah, I mean, it's going to be great. I think he's going to do really, really well. And I've always thought that. And also, I really like Sean. I think he a lot of CEOs in this market, and I won't name them, but they're controversial or people don't, like everything about them. But every time Sean opens his mouth, I'm impressed by how intelligent he sounds and the fact he seems to have common sense, which often is lacking. But anyway, what are your thoughts? What do you think, Mark?
On POW, I mean,
Yeah,
I personally have been a shareholder in POW for a long time. I mean, going way back to some of the early, I think when it changed actually from, was it African Battery Metals?
yeah. Back in the day.
Yeah, back in the day. And of course, it been through quite a few ups and downs
Yeah.
since then, as most of them are. Of course, following that whole journey with Paul. I mean, yeah, I'm quite excited. I'm very excited about the Saudi opportunity. I think that again, meeting the Future Minerals Forum people at Mines and Money last year and having a good chat to them about what Saudi want to do, well, as you've explained, diversifying away from oil. They've got a lot of money and they want to redeploy that effectively internally, but also externally. And Shauna seems to have got straight on board with that vision.
Mm,
And I think Saudi is going to play a huge role in the future of mining, and it's come as a bit of a surprise. Only, as I say, in the last few months, and been working on it for much longer than that, obviously. But really, in the last few months, it's become a bit more in the public eye that this is what the Saudis want to do. So I think just on that alone, I think the opportunity is very exciting.
mm.
And yeah, Sean seems to very much be going down that route to exploit that with hopefully getting some fairly easy cash flow in the door through the recent work he's been doing. What's it on?
GSA, GSA.
GSA. Yeah,
Yeah,
yeah.
yeah. Well, I mean, the last thing I'd say on power before we move on is that right now and at various points throughout 2023, I can't say right now actually because I don't know for 100% off the top of my head, but the balance sheet of the company, as in what the assets could be sold for, what they're worth, um, is higher than what the market capitalization is. So you there is kind of like a base value on where the company's market cap should be, and it's currently below that. So and nothing is guaranteed in investing, and but based on where the share price is now and all the irons in the fire, it wouldn't
Mm,
surprise me to see a sustained rise in the near future.
yeah. And then you mentioned about the spinouts there. Of course, we're still very much waiting for FDR, which is taking a long time. As far as I can gather, they really want that cornerstone investor to get on board.
Yeah,
And I think, but given it's Australia, I just get a feeling it's a bit difficult to, I don't know, either to do that outside of Australia.
I
I
think
mean, we don't have many
it's
Australian companies on the books. It's mostly
well,
US, North America, and the UK. I don't know.
I think it's the answer to that is that like the Australian regulation is much tighter than in London, for example. Um, so on multiple levels. For example, I do analysis for Australian companies, and you need to do some really specific and very complex exams to be allowed to do that. Um,
Right.
where they have like a lot of or for example, if you're drilling an asset, um, in London, you can send out some lovely photos of your like assays and what's going on. You can't do that in Australia until you officially RNS'd it. So there's a few like there's a lot more like stronger regulation over which has ups and downs. I mean, the positives are that like you have a lot more confidence in the companies, but the negatives are getting an IPO away, for example, and like explaining your assets. It takes a
Mm.
lot longer. I do think they will get it away eventually, but if you look at I don't think of the words. If you look at the two IPOs they've got away so far, First Class Metals share price not doing particularly well, but again, not many are. But the work they've done on Zigzag and the assets that they have on the books, eventually that will come good. And then Golden Metal, I think we should take 5 minutes and chat about. I mean, what Oliver's been doing has been really
Indeed,
great.
GMET.
Yeah,
Mm.
yeah. So I mean, he Power owned, I think 61% of Golden Metal still. So that obviously they're very invested, forgive the pun, in Golden Metal's success. Pilot Mountain, Oliver's just raised 750 grand from Pure Bond, and he's going to go drilling. And there was a little RNS out today about Garfield and the advances going on there. And it's Pilot Mountain again. I mean, I keep saying this to multiple people. It's the largest undeveloped tungsten deposit on US soil. Um, this is a strategically important asset, and at some point, it's going to get mined. The tungsten is going to come out of it. The work that Oliver is going to do to drill it and make the reserve larger.
But why
One
is
would
it the
hope.
most underexplored tungsten? Why hasn't it been explored?
Well, the answer to that is pretty simple, which is that da, 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 the US gave up on its own tungsten exploration and tungsten. There's no that they gave up pretty much on tungsten production, because it could get source for tungsten from elsewhere, China, for example. Now, obviously, there's a graphite export ban, and there's a couple of rare earth minerals have been export banned from China to anywhere else in the world. And the tungsten, like titanium and a few other metals, you can't replace them with anything else. You need to have them. And so you have the situation where I believe most of the tungsten that the US gets currently comes from Japan. Don't quote me on that, but Japan can't make any more tungsten than what it's already providing. So as the demand goes up, the US needs to develop its own sources for national security concerns, not just because Japan can't make any more, but also because China could put an export ban in place, and then you're going to have a situation where they're not going to have a critical mineral that they need. Now, one of the key uses for tungsten is in like military applications, and the national defense stockpiles have been like completely whittled down. There's now funding has been put in place to like get them back up again. And what it is, it's just one of those assets where in a peaceful world where there's not much danger and not much risk of war and everyone's getting along, it's not very valuable. It probably just stay in the ground. We now have a world where, Russia has invaded Ukraine, or the Israel-Hamas war. China's looking at Taiwan every other week, a bit wistfully. And so you kind of, if you are the United States and you want to secure your own critical minerals, you're going to want to get that tungsten mine up and running, especially if Oliver can prove that it's much larger than, it's already the largest undeveloped asset in the US, but there's probably a lot more tungsten to be found, is what Oliver's argument is. And that's why he's going to go drilling. And it's based in, it's in Nevada in the US. It's pretty much the best possible location if you want to mine something. So yeah, I mean, he's got a really, really bright future, and I think Golden Metal's going to do really, really well.
What are you more interested in with their project base? Tungsten, Garfield, all of them?
I think, we'll start with the least important is Kibby, which is like a lithium assets. If something happens with them, that'd be great, but I don't think it's going to move the company much. Golconda, there's a couple of majors in the region. So if you can drill it down a little bit and prove there's something worth exploring there, that'll probably get sold off relatively quickly. I think Pilot Mountain is definitely the flagship because it's going to attract that grant funding eventually. And it's a strategically important mineral. But I think Garfield is the interesting one because it was just kind of like when the company IPO'd, Garfield was just a side project. Like, it's nice to have. We're going to see if there's anything there. And now you've had these kind of like bonanza targets come out of it. It could be that when you stick a drill in that project, it's a significant find. And the thing is, you don't know until a drill goes in the ground, no matter what anybody says or what marketing goes into it, exactly what you're going to uncover. But it's gone from a little side project to what could be a second flagship. So I don't know, Mark. I mean, all I know is that it's a company that you want to have shares in, if nothing else, for diversification. Plenty of people have shares in like gold and lithium companies, but there's how many tungsten companies do you know that you can invest in? Gold Metal. I mean, publicly listed. I think Gold Metal's the only one that I can think of off the top of my head. In the same way as titanium, you've got Sovereign Metals, or trying to think of other ones. I mean, they're Jubilee Metals with chrome and their chrome processing. If you want exposure to like a junior with a specific metal, it's kind of your only tungsten choice. So, and I've always said, if you want to invest in like small cap market, especially in like mining, you want to be diversified. So, yeah.
Yes. Diversification is very important, particularly in the small cap mining. You don't want to put all your eggs in one basket, however tempting that might be.
Yes, it always feels tempting, and then you lose all your money, or you become
incredibly tempting. And then,
but then there's always that millionaire out there, like somebody put all their money into one ticker,
It
And then
does
they went,
happen.
well, Greatland Gold, for example.
Perfect example. Perfect
Yeah,
example. But how rare is that?
it's rare. It's rare, but it does happen, like Power
Yeah.
Metal and their UEE IPO. I think Power's got 17, 18 uranium properties in the Athabasca. If they find one bonanza target that, along the lines of the world-class mines already, like Rossing, for example, or, already there,
Mm,
then you could easily see that share go up 30 times.
mm.
Obviously, are you likely to get a super bonanza target? Um, Not likely, but is it possible? Yeah, definitely. So it's I personally couldn't do it because I wouldn't be able to sleep at night. But I know plenty of people put all their money into one basket and hope that it all goes well. Not
Well,
you, Mark.
yes.
Not you.
Not me.
No,
No.
you wouldn't just pick one, would you?
Yeah, I did. I used to do that in the past. Yeah, you'd really
Mm.
buy heavily into one story. I think the first time I did that was ECR Minerals, and I mean that's been going around the block a few times. That company, I think given where we are now, I do like Nick Tulloch a lot, and of course Mike, aka Doc. Let's see what they
Yeah.
can do.
I
I do
think
like what they're seeing, but no, I don't necessarily would put everything in. No, I wouldn't put everything in one. It's a bad idea. I mean, diversification is very important, and not just in the stock market as well. Physical gold I buy, wine actually with BBR. I started doing that this year. That's long term, very long term. That's that's retirement level. Yeah, I like to put it around. I think anything I put in the stock market, i.e., on the AIM market, is really it's what I call play money. Um, well, actually, I do a lot of futures trading as well. That's my kind of fix, if you like. I trade the
uh,
futures market. So sort of from 3 o'clock onwards, when the US opens, I trade the trade futures on on the ES mostly. That's kind of my because we're all it's you've got to be careful. The gambling mindset's incredibly dangerous, but we all have that because that's why we do it. Otherwise, we wouldn't put money at risk.
well, I don't know. I think I was actually no, it's funny, it's my older brother he's not in finance at all, but he likes to gamble. And he doesn't have a gambling problem, he likes to gamble. And he was saying that like if I go play a hand of blackjack, my odds are around 50-50, right? So
Mm,
if you're going to invest in a small cap company, surely it's got to be better than 50% chance of succeeding. I'm like, no, because you can invest in 10 of them, 9 of them fail, and one gets you like a 10,000%
yeah,
return,
yeah.
and then then you're away. And he's like, oh, okay, fair enough. But it is the cap. But it's a fair point that if you go for like just one company, um, what are your odds? That you're investing
Yeah,
in one like exploratory company. Is it better than 50%? You're going to find something amazing? Probably not.
no,
So you have to have more than one. And I would say the other thing is, in this market where like raising money is a very difficult thing to do, companies that like Jubilee Metals, for example, that already or Sovereign Minerals or whatever, like companies that already are either like revenue producing or have a lot of cash in the bank, or Amarok Minerals. um these companies are much less risky. When you've got companies that are going to have to come to the market to get some money every few months, and they're going to have to raise at a huge discount, obviously it's creating a very kind of depressing market. But yeah, I mean, you mentioned ECR Minerals. They did a placing. I think they did a placing recently. I haven't really followed it massively.
yes, they
But
did.
yeah, yeah. But I like what they're doing. At least they're going out and they're drilling assets and they're getting
Mm,
essays out of the ground. I mean, we had this conversation like a few months ago, and in that time, it's gone up pretty substantially. So yeah, I think yes. When you look at ECR and what they're up to, they are, actually doing what you're meant to be doing in the sector, which is getting some results out from the market. And
indeed,
investors are appreciating them for it. And yes,
indeed.
ECR's been around the block a few times, but actually the assets they have could be
Yeah,
very valuable if they just bloody find something. But
they
again,
could find
you can only
something.
know that if you put a trill in the ground and they're finally
Yeah,
bloody doing it. So,
exactly, exactly. I wonder if I can throw one at you. Cobra Resources. Do you know much about Cobra Resources? Just looking, it's quite timely. We're recording this on Monday the 25th, and Cobra's up 40% today, based on the some assay results confirming the high grade concentrations of rare earths. And maybe it's the quote from, and there was an interview done. We did an interview with Rupert, and I picked him up on this when on his quote: "The results are sensational. Boland is not only unique but world class." So,
I mean, there's a few things to unpack there. The first is I don't know what their financial position is, so I won't comment on that. I did read the RNS this morning.
Okay.
What was So, but okay. So there's a few things. The first is that they're in Australia, which is like the best. Well, I say the best. Nevada, Australia, and Athabasca. Those are the places you want to be if you want to find something really great. Then those tier 1 jurisdictions surrounded by infrastructure and whatever else is great. So that's obviously a great thing. The only thing I would say with rare earths, and again, I'm not an expert on rare earths at all, and they're saying it's world class and exceptional scale and whatever else. Yes, these results look really, really, really promising. The only thing that I know about rare earth mines, that you see this with like a fair few of them, is that getting the minerals out of the ground economically, because they're so specialized, can be difficult. I mean, that's the only comment I would have on that one.
Is that so that's the metallurgy that you've got to have?
Yeah. So if the metallurgy is I'm trying to think of the word. If the metallurgy is like advantageous, it can be completely fine. But if the metallurgy is, they're talking about amenable to low cost extraction via
ISR
recovery.
That's what they want to do.
ISR, yeah, exactly. So they're saying that it will be amenable and economic. But at the moment, it's still relatively early stage. So this is a company that I would do, significant
so it's
research
good.
into.
It's good early stage to get those results.
These results are great. These results are great. This is exactly what you want to
prove
find.
the concept.
But you've got to prove, exactly. You've got to prove the concept. The good news is they're in the right part of the world to prove the concept. And having got those assays out, they're not going to have any problem getting people to work with them to make that happen. But all I would say, if it was like a gold project, right, you would be able to go, they definitely got something. But with rare earths in particular, it's just one of those things where you can have like really promising assays, but it's how the metallurgy, how the mineralogy is in that particular asset. And I would say the only thing I would say is that they're saying that they'll be able to use ISR, and that the metallurgy is good. But that's what I would want to see. If I'm not invested, but if I were invested, what I want to see next is more details on that, because you clearly know more information than you've RNS at the moment.
I think you're going to see that fairly soon.
Yeah, in the next few days, you'll probably see it, and it wouldn't surprise me if they come out with an RNS, which is here's how good it is, and then you see another sustained rise. Because if you had that alongside the grades that you had, the chances are you would have had an even larger rise today. But people, I think people have been burnt so many times in these markets that they're holding back. They're waiting for that extra data to come out. But yeah, I mean, this RNS is, if you were invested, this is exactly what you want to see. So very
indeed. Well, it'd be nice to watch it the next sort of month or two, where to get that metallurgy testing completed, which is underway now, and they are ready to. They've got they prepped when they drilled
the samples,
to have
haven't they?
The pilot. Yeah, they've got the samples. They've got the pilot set up, ready to go. So I think we'll find out. Yeah, during
they're also doing the hydrology testing, aren't they? So, which is the water testing. So that's commenced too. So again, I mean, all of that is once you get those results back, combined with the grades, you'll then have what could be a really, really exciting asset. But until you get those results back, it could still not be worthwhile. And I'm not saying that to like be cruel or mean to investors or anything at all. It's just when you're working with rare earths, it's one of those things. It has to be. Yeah, well, there's a reason why they're testing for it, right?
Yeah, so, exactly.
And they're going to get those results. The good news is those results will come back, I think, very quickly. So you're going to get an RNS relatively soon, and then you might have another bonanza day. And I would suggest they wouldn't RNS really great assays to then kind of let everybody down, a few weeks later on.
Yeah, it would be a shame as well for those comments of the CEO to be said like that. And then,
exactly. Often you have to take it in context, don't you? You go, hang on, would you actually, for example, Mark, say you were a CEO of a company and you said, "Oh, look at these amazing grades we had." Then a month later, go, "Well, the grades are great, but actually we can't mine it." You
Yeah,
know, that would make you look a little bit foolish. So I
little.
hope a little
Yeah,
bit. So I hope that they'll come out with the results of those
yeah.
studies, and all the investors can go buy champagne, take the rest of the year off.
Hopefully. Well,
Yeah,
we'll
hopefully.
see. We'll see,
Yeah.
won't we? Could
Well,
we could we just finish briefly on Cadence, if we can,
a
because
mapper.
a mapper. That's the main focus. They've got lots of other sort of fingers in pies, let's say, but let's just focus on a mapper. They've, of course, they had the optimization study that they've been working on that they announced last week, which is
Mm.
giving a fair few cost savings there. And they're working at the moment on the environmental permits, or the environmental studies for various elements to then get the installation licenses. And I mean, if I try and paint the picture, because I'm still learning very much about what it's all about, but it was a past producing iron ore mine. They've got a huge legacy infrastructure there on site. They've got a very long, fully owned railway line that goes to a fully owned and quite a substantial port. I believe that port suffered some problems quite a few years ago and part of it collapsed. And then, given that with unfavourable markets, iron ore prices, the place was actually then obviously put on care and maintenance. And Cadence managed to pick it up through various elements, various means through debt and what have you, and taking ownership of it. But they're at a point now, and you see the pictures of them, and I think they could do with getting some more pictures out, but it looks like there's substantial infrastructure there. Obviously, it does need to be rehabilitated, and I think the tune was about 200 million. It's probably now, well, it's been reduced by about 63, so let's say, 130-ish million. Kieran said he wants to finance it through a mix of equity and debt, about 20% equity, so a fair bit of debt there to be acquired if they can find it. But I mean, not much is going to happen this year. Obviously, well, I say that lots is going to happen, but you're not going to really see physically much happening. It's going to be all study based and permitting based. But then as we approach the end of the year, I'd kind of like to see this company start to really actually get on with rehabilitating and getting this thing back into production. But what are your thoughts? What do you think on it?
Well, okay. I think the first thing to say, you've got an ore reserve estimate. It's been generated by Prominas, so it's a decent reserve estimate. 195.8 MT, average grade 39.34% iron, cut-off grade 25% iron. So you've got a really you have a valuable asset. I think that's the first thing to say. It's not anything to be sniffed at. Now, the reason why a mapper was kind of shut down back in 2014, wasn't it? And it was about 10 years. It was about 10 years ago.
It's a while ago, yeah.
Yeah, the port that they were using, there was a huge geotechnical failure, which essentially, previously the project was creating $54 million of profit in 2012, $120 million profit in 2011. Obviously, iron prices are higher now, and demand for iron is still, regardless of China, still relatively strong. So a very profitable project. But getting that port back up and running, it is 90% of the investment case. Now you're talking 100. Yeah, I mean, it was the exact figure they reduced the capex cost down to was 128.5 million, down from 191.7. Sorry, excuse me. But 128.5 million. Assume you need some overrun costs, because everything always overruns. You're looking like 150 million US dollars you'll need to raise through debt and equity. The question, and that sounds like a lot of money, but you're talking, to build like a greenfield iron ore site will be hundreds of millions more. But 150 million US dollars, where are you going to get that money from in these markets? You've got an asset that's probably worth the investment. What kind of debt and equity deal are you going to get for current investors? I guess the question is, if you're a current investor, are you better off waiting, getting this deal in place? Will you be left better off once the deal is in place? Or are you better off selling, waiting for them to come up with a deal and then buying back in? I mean, obviously, if you get a deal in place, the chances are that the share price will rise and everything will be gravy. But you're also dealing with a market where people are struggling to get cash deals together. And I would say with Cadence in particular, they've got a great asset. They've got a great plan. It's a brownfield site. I don't think they'll have any issues. You've got this 200-kilometer long railway, and it's going to be relatively very profitable once it's up and running. But you've got to get that money in place first. And I guess, if you were going to talk to Cadence um, about what the strategy is, if CEO is Kieran, isn't it? I don't
Kieran
know.
Moseria, that's right. Yeah.
Yeah, yeah. But if you were going to speak to Kieran, I think you are soon, aren't you? The question would
Yes.
be, um, what can you say to somebody currently invested about the chance of success of getting this financing over the line? Are they going to be better off now, or are they better off selling and buying later on? And I know it's
Yeah.
kind of a direct question to ask, but it is one of those things where I think it's clear that it is a project that they should be able to get financing of some kind for. The question is, how much is it going to cost? What's the trade-offs that you're going to get? Because people don't give $150 million away for nothing. So so that's my perspective. But so it's kind of a wait and see. I think it could be a really, really great story. But you need to have that question on financing answered.
Yeah, I
Once you
think it
have
could
that
be a
done,
great story. I mean, if you've got all of that stuff there, imagine that. It's that's way more than, for example, Prem have, for example. With a full railway line. I mean, how cool is that? It's pretty cool. But yeah, you've got that financing's the big hurdle. Yeah, you've got to get that away, haven't you?
yeah, well, I think so. I mean, and that's nothing on the company at all. It's just the reality of the markets that you have,
At the
and
moment.
yeah, at the moment, and then also of just the fact that if you're a kind of institution, or because it'll have to be an institution, it's not going to be like retail. Obviously, this amount of money, it's very difficult. If you can put your money into like the large caps in the US and get like a huge return over the course of a year, you need to be able to sell this, to those institutions. How can you make more money off us than you can from, those large cap investments? And yes, you can do it, but obviously, whenever you're rehabilitating a brownfield site, there's also an element of risk there and cost overruns and issues that could come up. But again, as I say, the second they have that financing in place, you'll then have a really, really compelling story, a really compelling investment case. But yeah, at the moment, it's how long is it going to take to get that financing over the line? And I honestly, I don't know the company well enough to know
How long it's
the
going to
answer
take,
to
and
that.
what's the actual
Yeah,
cost of it
yeah, yeah.
for
Do you know?
existing shareholders,
Yeah,
future shareholders?
exactly. All of those questions, and for example, okay, here's an example. We don't know, but every analyst in the world is saying interest rates are going to start coming down, right? Is it better to wait a year and then get a much better financing deal? But when there's when the rates are much lower, when the risk appetite has come back, potentially when the AI bubble has collapsed, are you better off waiting? Like I don't know. I don't know the answer. Obviously, no CEO is going to say, "Oh, we're just going to wait for conditions to improve to like advance our projects." But actually, when you're talking about this size of project and that amount of money, you're probably far better off waiting for market conditions to improve before launching into something that a financing deal that's going to tie you up probably for decades. So yeah, I don't know. I don't know. It's definitely one on my watch list, but not one I would invest in yet until we get certainty over that financing.
Okay.
But again, it might be that anyone who's not invested now lose out on a spectacular rise once that deal gets over the line. So that's just my thoughts.
Indeed. Well, thank you, Charles, very much again for your time. It's always good to talk to you and get your thoughts on various things. How are things going on Ask Charles? Are you just as busy as you were?
Yeah, I mean it's a very well, we're up to like 800-ish odd
Okay.
people on the channel now. So yeah, it's getting busy now, the Telegram group, but it's manageable. I think you have a lot of people self-answering the questions, and I think that I'm trying to think of the words. I think that more and more people, investors are getting savvier and savvier, so you're having fewer and fewer questions. But the
Okay.
ones that we get, the quality of them is really high,
Oh,
and
good.
I think that a lot of people get like a lot of value out of it, and I do enjoy the banter and the chat, and
Sometimes it's a place, isn't it? Almost
yeah.
a forum for people to talk to fellow investors. So you can't undervalue how valuable that is, really.
Well, I think I mean, for me as well, it's also valuable because sometimes I'll be very bullish or even potentially very bearish on a company. And I don't tend to wear bearish opinions that often, but regardless, I'll put out an article. or I'll, give an opinion, or I'll send out a tweet or whatever. And then on the group, someone might put out something which is a counterpoint to my opinion. And sometimes it makes me reconsider what my opinion is. But more importantly, it means that if you're an investor and you're reading an article that I've written or listening to a podcast or whatever else, you're getting an alternate perspective from somebody who disagrees. Often that's really valuable, because all I have is just an opinion. I'm not always right about everything. Nobody is. And it's really important that you have people who, challenge you and who go, hang on, have you considered X, Y, and Z? Why aren't you talking about A, B, and C? And I go, okay, actually, that's fair enough. I'll rearrange my opinions and come back to you. So yeah, it's helpful for me as well. But, eventually it's nice to know that no matter what I write or what podcast I do, we're going to get at least a few hundred guaranteed people listening. We're not just wasting the time, which is
good. Very good. Well, thank you again, Charles, and let's not leave it too long before we chat again.
Yeah, indeed. Bye, Mark.
Thank you for listening to another podcast from Market Musings. Tune in next time.